Okay, so I'll be launching the stream for the Zoom to let participants come in ready. I'll start now. Hi everyone. Thanks and welcome to this evening's session. Right, thanks everyone for joining in for this session itself, where we will be sharing about rethinking Asia and a modern way to approach this regional investing. Right, so we are very pleased to have with us Nikko AM. All right, so there will be a speaker from Nikko AM, Mr. Peter, right, who is the joint head of Asian equities from Nikko Asset Management Asia Limited. Right, so what will happen is that I will start off first with sharing of this some promotions that we have from Phillip Securities, followed by there'll be the sharing from Mr. Peter, and we'll end off by sharing how you can actually choose to apply for this ETF initial offering period if you are interested to be invested in the way that is being shared by Mr. Peter later. Right, so without further ado, let me just start off first. So when we first start, right, we do have a refer a friend campaign for our company. right, for Phillip Securities. So let's say if you do have an existing account and you do have friends or family members that are not yet account holders with Phillip, if you refer them, you can actually get this referral reward, right? So you can just use a specific link. All right, so you need to scan the QR code to generate a specific link for you first. We will haven't update this image here, but I think the value should be 600, up to 600. So it's $60 per account that you refer to Phillip itself if they fulfill the criteria of funding the account. All right. Next is that we do have a share financing rates itself. There's also 4.5% for Sing dollar, 5.88% for US dollar, and 5.58% for Hong Kong dollar. So if you do actually have interest to use financing to enhance your investing, our margin account is the one with these preferential rates, which can potentially allow you to earn positive carry for investing, especially if you're looking into investing for dividends or for REITs itself or for higher capital gains in terms of exposure itself. Next, we also do have the SGX market adapt access, right? So this is currently a free access. You can just apply for it under the rewards tab, either market data and rewards, or just the rewards tab, right? Where you can actually see the free SGX market adapt until 2026. Okay. Oh, last one, we have this Nikko AM, the new ETF IOP promotion. All right. So for this one, right, you can see that there's these four main countries, right? There is mentioned Taiwan, India, South Korea, and ASEAN. And more will be shared to you by Mr. Peter. Right. So this IOP promotion itself is until 20th of March, which is also the last day to apply for IOP. You can get $10 cash credit for every 1,000 invested during the IOP period. So $10 for every 1,000, capped at $100. Right, capped at $100 per account. Right, so this will be a limited promotion because there's a limited quantity for those that apply. So if you are interested, after you find that the investment is suitable for you, do actually apply fast to be entitled for the promotion itself. Okay, finally, we do have this QR code. You can just scan to join our Telegram live group. All right, so if you're interested to see more market news and market updates, you can just join the group for us, and then you can just join through this QR code or the URL that you see over here. Okay, so we'll also be taking questions later. Right, so do place your questions in the Q&A box and not in the chat box itself. So without further ado, let me now pass the time over to Mr. Peter. Right, so I'll stop my sharing of screen so that you can share their slides over.
Thank you very much for the introduction, and thanks everyone for joining the webinar this evening. I'm here to introduce to you the Amova MSCI All Country Asia ex-Japan ex-China ETF. We'll call that AJEC for short. Some of the basic product key facts and descriptions. We're using MSCI as the underlying index. That index will rebalance quarterly. The scope, as mentioned, are Asia developed, excluding Japan, and emerging Asia, excluding China, as defined by MSCI. We'll be using a representative sampling optimization process to construct the product. It's domiciled on SGX and is available in SGD and USD share classes. Management fee for the product is 0.5% with a TER cap of 0.6%. We estimate to have around 150 securities in the ETF initially. Now, what makes up the product? What constitutes the opportunity? There are two key factors we've chosen to create this. One is to access a bit better the long-term sustainable growth opportunities within Asian markets. China and Japan tend to dominate both from an index perspective and also from an economic perspective when you look at the headline. But in reality, the bigger growth opportunities and some of the more sustainable growth opportunities are in the smaller markets. It also gives you control and flexibility to tactically allocate to China or Japan as and when you need to, while sitting in this kind of product, which gives you a little bit more long-term security. We'll go into some of the underlying drivers within India, South Korea, Taiwan, and ASEAN throughout the presentation. In terms of the underlying index then, it's MSCI from their Global Investable Market Index methodology, or GIMI. We picked this because we think it's one of the most well-recognized. It's clear and transparent methodologies. It's also probably one that best captures the underlying opportunity that we're looking to access as well. relative to other alternatives. The benchmark constituents are around 473. If we look then at the underlying countries and sectors within the product on the next slide, you can see that Taiwan makes up 32%, India 32%, Korea is around 15%, and ASEAN collectively is around 15%. On the sector side, information technology is the largest at 36%, 24% financials, and approximately another 20% of sectors geared towards more domestic demand oriented industries. Looking into the historic return aspects of the product, and again, historic is no guide to future, but we believe some of the underlying drivers should lead to that sustained return. We'll go into those later. This index is outperformed by around 30% against Asia ex-Japan and all Asia, including Japan. And importantly, sorry, on the previous slide, it has much better drawdown protection during times of stress. In every example, historically, with the exception of the COVID pandemic, which really hit emerging economies a lot harder, but was one in a century kind of event. Otherwise, drawdown protection has been much better. If we look at the historic rolling return characteristics, over 1 year rolling returns, they've been better at 1.3 and 1.8% over the respective peers here, all country Asia and Asia ex-Japan indices. Over a rolling 3 year, we see that expand to 1.7, 1.8% over peer indices. And over 5 year, we're looking at 1.4% annualized rolling 5 year return over peer indices. But putting that into perspective and looking also at the risk characteristics, volatility and risk, we can observe that this is lower for AJEC relative to AXJ over 1 year and slightly higher than all Asia. But as mentioned, the majority of this higher volatility came during that COVID period. Otherwise, it would have been lower than both indices. This is similar over a rolling 3 year time horizon, and again over a rolling 5 year time horizon. Expressed in terms of risk-adjusted returns, we can see this new product has higher risk-adjusted returns over all time horizons, really identifying with the long-term product and long-term opportunity we believe it captures. A little bit about the execution process then. How do we harness this opportunity and bring the product to market? It's quite complex, but it involves 3 different skill sets within Amova or Nikko AM to make it happen. Our independent risk team will utilize a Barra optimizer procedure to recommend the representative sampling. Our investment services and dealing teams execute on the trades, manage daily flows, and quarterly rebalancing procedures in line with the underlying index. Our portfolio managers then scrutinize the process, stay on top of corporate actions, and analyze results and constantly look to refine and enhance and minimize the tracking error. The end result is an optimized portfolio of roughly 150 stocks looking to mimic the underlying Asia ex-Japan ex-China index. So what underpins these long-term growth opportunities or the long-term performance and better risk-adjusted returns? Why do we think this continue? There are 3 major ones, but let's first start with technology. This chart shows historic sales in both semiconductor and memory, going back to 1999. Asia's success in both of these categories has deep roots going back decades. And as you can see, it's a long-term structural uptrend. There are cycles within this, of course. PC and internet drove the 1990s, smartphones, tablets, mobile phones, the early part of the 2000s. We then saw cloud and server coming in around 2015. Today, it's AI that's fueling demand for these 2 specific areas. Tomorrow, it could be robotics, electric vehicles, autonomous driving, etc. But whatever the technology innovation, Asian companies are crucial to the supply chain. Long-term sustainable sales growth CAGR in this area has been around 6% over this period. Another point and a question that probably comes up is what happens if there's US fragility. We always say that Nvidia has been a fantastic company for a long, long time. Market share of 70 to 95% in leading edge GPUs and an astonishing 90% GPM. At some point, greater competition will happen, whether it's AMD or others, but they will still have to come back to your likes of TSMC, Samsung, Hynix for leading edge semi and memory. Looking into the next major driver, which is India. Indian EPS, you can see here, is compounded at the highest growth rate of any emerging market over the last 20 years. Over this period, earnings has grown over 6x, while the S&P is around 3x. Yet, the economy is still one of the most emerging of all, with GDP per capita at only 2,500. You compare that to China at 12,500 USD, or Japan at 33,500, or the US north of 80,000. It's one of the best demographic profiles, and it is also, importantly, at this point in time, one of the best placed geopolitically for this trend to sustain. Positive reforms across both physical and digital infrastructure, nationwide identity schemes, real estate reforms, bankruptcy reforms, and cutting red tape are some of the most significant positive changes within India that are likely to fuel growth for years to come. They've also been fostering innovation. And if we look on the next slide, there are a lot of new and exciting companies that have come to market in recent years, and innovation is starting to thrive. A few examples we've listed here are things like the internet economy with Zomato in food delivery. You compare that to Meituan in China in terms of monthly active users. We look at hardware tech here and electronic manufacturing services and Dixon Technologies sales relative to Honhai. Apple is now producing some of its leading smartphones in India, which is something that was unthinkable just 5 or 6 years ago. In new energy and EV, renewable capacity in India is a priority still, irrespective of what might be changing in the US. They see this as part of energy security, and it also now makes economic sense. Leading companies there include Tata Power, and they are intent on doing their own production of equipment there as well. Lastly, we just looked at fintech, and this looks specifically at the insurance penetration rate. India at only 4% versus China at 88%. The company there is Policy Bazaar, which operates the largest web aggregator platform for Indians to buy their insurance products. Timing-wise, the recent correction brings Indian valuations a lot closer to long-term averages, so it's a much better time to enter the market than it has been for any of the preceding 12 months or so. Onto the geopolitical question, and really the third major driver, which is supply chain relocation and the changing nature of globalization. This chart shows you the distance from the US, the size of the labor force denoted by the size of the bubble, and also the cost of that labor force. And what you can see here are countries like India and parts of ASEAN should be the most direct beneficiaries and have been over the preceding 5 and 10 years, but those trends are likely to accelerate and get bigger. The other new aspect that's come to light recently is more Chinese outbound direct investment, or ODI. Companies like Midea, Hungray, CATL, etc., listing in Hong Kong on 8share to use the proceeds to invest in global growth and global manufacturing. Next, we look at some of the drivers then within ASEAN as well. As mentioned, that supply chain relocation is driving a lot of much needed investment into parts of ASEAN. And that combined with things like structural reform and greater economic integration felt no more so than locally between Malaysia and Singapore of late, and really is driving a lot more industrial cycle and industrial trade and industrial activity. And that in turn will accelerate and create jobs and income and promote consumption. The two feed off each other. A larger consumer market in turn attracts more foreign direct investment, driving more wage growth and job growth. We see this happening again in specific areas in different countries within ASEAN. Indonesia, for example, has been pretty key on the electric vehicle side, Malaysia on the tech side, and autos have been a big part of Thai investment for a long time. But these are increasingly broadening out and changing, and those are some of the more interesting opportunities. Looking then at a summary of valuations and fundamentals and how AGEC stacks up relative to other major indices. It's the fourth line down on the table above, and what you can see is it has one of the best earnings growth profiles of any major indices, with some of the most improved ROEs and at much more reasonable valuations, particularly when compared to MSCI World or US equities. These are underpinned by the long-term growth drivers we've already discussed. And one thing to note just from the two charts on the bottom is the discount that Asia Tech trades at relative to SOX. And also with India's recent correction, this is MSCI price to book on India. We are now back to levels at 5-year averages. It's only been lower during the COVID period. So it's a much, much better time to start looking at Indian equities. We've also seen recently policymakers in India, RBI, and regulators start to ease, which is an important driver going forwards, and also oil prices coming down significantly is another big driver for India. Also, just to highlight on the next slide, Indian equities are now cheaper than the S&P. This looks at the next 12 months price to earnings, and you can see this is something that's only happened 4 times before, and more often than not, this has been a good entry point, certainly relative to the S&P and US equities, which has received the bulk of inflows over the last 3 to 5 years, sucking out money from nearly everywhere else. So if I was an investor in US or global equities, I would feel a lot more comfortable reinvesting that money back into Indian equities at this point in time, where I know there's easing and policy support, and I know there's economic reform, which has been positive, versus some of the uncertainties gripping US equities at this point in time. So on the next slide, all investments are not without risks, and we highlight a few particular ones here. Geopolitics is key, and that is both what's happening within the US and how that flows through to other markets, but also within Asia itself as well. And what we call the new net zero, which is Trump's ambition to have a net zero trade balance with the rest of the world. Higher for longer policy rates and a strong US dollar. This will always be a headwind to most emerging economies. The offset to that, though, is one, for the first time this cycle, the US now looks like they may need to cut policy rates because of economic weakness. But also the strong US dollar has rolled over pretty significantly since Trump's inauguration. And we're no USD experts here, but it has been very high for a long time. And this would be one of the tailwinds if it were to weaken further for this particular type of product. Tech and AI capital expenditure and that cycle. We've talked a little bit about NVIDIA and competition. Again, the two other aspects to note here are that all the leading Mag 7 companies and investors in US and hyperscale and CapEx all have very, very strong free cash flows. They can continue spending for a long time. They're not dependent on equity markets or capital markets for that funding, and they are in an arms race against each other to continuously develop and improve. The other thing with this is, and this is again speaks to the DeepSeek moment this year, Chinese related AI capex has almost doubled or tripled in terms of estimates from the end of December to today. So there's a new demand driver coming in from the Chinese, which wasn't there before. Lastly is Indian small and mid-cap outflows and valuation derating. Something we've been concerned about for a little while. It has derated pretty significantly to the tune of 30-40% since the peak last September. So some of that derating has come through. But the other point with this is, and you see it in that price to book chart we showed earlier on India is that the large caps are pretty cheap already. And this ETF primarily invests in the large cap equities. Those are at attractive entry points already. So irrespective of being concerned about Indian small and mid cap, those larger cap equities are starting to look a lot more appealing. If I then summarize why AJAC, we would contend that this offers you some of the most structural opportunities in Asia, something that you could sit on longer term with less risk relative to other alternatives. In USD terms, global semiconductor sales over the last 25 years have grown at 6% annualized. Indian EPS over a 20-year CAGR are greater than 9% annualized in USD terms, and global trade has grown at 3.5% CAGR. Although, as we've observed, China captured the vast bulk of that opportunity pretty much since the early 2000s, and that is starting to change and starting to shift. Those are some of the key drivers and key long-term structural trends that we think underpin this sort of product and the opportunity set. With that, I would like to thank you all for listening, and please invite any questions you might have on the product, the opportunity, or anything else I can help with.
Uh, Hello?
Hello.
Okay, so okay, so I thought I hear your thing. So, Peter, are you moving to Q&A or?
Yes, please.
All right. So let's do let me just share the screen over to my site first, so I can just share how to apply for IOP, and then we'll then take questions from the Q&A. Will that be okay? Give me a moment. Let me
Yes.
share the screen. All right. Okay, give me a moment. Can you see my screen now, right? Okay, so this is the home screen that we have right now on the Poems website, right? If you click on promotions, right, you will see the promotion for Nikko AM IOP on the second one, which is this particular one. All right. And then this is the landing site of the IOP promotion page, right? So if you want to review the information or some short snippets of the key information, it's over here already. All right. So it also shows you the top constituents as well as the index, countries, and sector allocations, as well as other information like prospectus and the product highlight sheet. There's also the different details of the IOP subscription details, as well as the promotion mechanics below in terms of the T&C, right? And also the key information of the ETF itself. So if you wish to subscribe, very simple. When you click onto this promotion page, when you scroll down slightly, you will see this Invest Now option. It will lead you to the login page where after you log in, the account, you will automatically be ported over to this online form, all right, the IPO subscription page, right? So if you actually already logged in before you reach this page, you can find it under account management, under stocks, under online form. Is actually the middle IPO subscription page. All right, you can just skip if your information are all correct, and then you will see the application over here. So this is actually open from today already, and it closes on the 20th of March, which is this coming Thursday. All right, click on it, highlighted in blue, and click on apply, and you'll see the details appear, your details on top, and also the application details over here. Right, so the quantity that you have to key in here is a multiple of 1,000 with a minimum of 1,000 units. All right, so increment is 1,000, 2,000, and 3,000, and so and so forth. All right, and next, do note that there's two things. Key information. the transfer fee of $10 applies if you are using a cash management account, which currently my account is, which you can see over here on the top, right? It's a account type cash management account, AC. So if you choose as cash management account, you will have this transfer fee applicable to you. But if you are applying through a cash plus margin account or other custodian type accounts, you will not have this transfer fee applicable to you because the shares will be parked under the Phillip account. This transfer fee is to transfer the shares over to CDP, SGX to hold the shares. And one more last restriction is that you cannot use cash trading account, will not be eligible to apply. All right. So if you only have a cash trading account and you wish to apply for IOP period, you will then have to open a cash management account or convert your cash trading account to cash management to apply for it. If not, you can still trade on the ETF, just that not for the initial offering period only. Right? Then you must acknowledge the tick over here, the criteria, and you must declare all this information is correct. And then you go scroll down further. There's another one here, another declaration, and then key your password for confirmation before submitting the request of the IOP, and you'll be done. So if let's say during the period of time from now to 20th and you wish to check on the status, you can click on the application status over here. Right, you will appear to this page, all right, where you can actually see any orders that is here. There's no order here now currently because I have not yet applied. But if you apply, it will show the different order that you have here. You can choose to amend your IOP application order or withdraw if you wish to change the details of it. Let's say change the amount or the value of the number of shares applied. All right. So this is all for the application details itself. And let me stop my sharing before I move over to Q&A. All right. So Mr. Peter, I think there's some questions that we have in the Q&A. Not sure if you want to also share your slides, your deck, so that you can refer to some slides along the way of answering the questions. So for the first one is there's a question by what is the split between ASEAN and India? I think in terms of the exposure and also the this concentration risk itself.
Yeah, Edan, if you could help share the slides again. Slide 6. So India is around 32% of the overall portfolio. ASEAN collectively is also around 15%. Biggest market within that is Singapore, followed by Malaysia, and then Indonesia, Thailand, Philippines. So that's the geographic makeup.
All right, so that's the one. I think India is 31.9%, so it's still significantly higher than that of ASEAN. The big point is that in past 6 months, Indian market has been very bad. How would you confirm it will be better now?
So there's no guarantees. That's the first bit. But I would say, having covered India for 20 years in my investment career, you nearly always want to buy into significant corrections. Timing those are always very, very difficult. But some things that have changed already. One is that we have derated relatively significantly from the top, tune of 15-20%. That's in line with historic corrections. We also have seen policymakers start easing from being on a tightening bias. That happened with the RBI cutting rates, but also easing up on financials where they had been very, very tough. There may well be a little bit more to go in Indian equity corrections, but it would be the best time in the last 12 months to allocate to India. And as mentioned before, this ETF is primarily in the larger cap equities, which are relatively cheap compared to historic and certainly the last few years.
Right. Now, next question is that for the Taiwan stocks like TSMC, will you be investing in the US ADRs or directly under the Taiwan underlyings?
It'll be directly in the underlying Taiwan securities. ADRs, there's only limited amounts. They're not in the underlying benchmark, and they do from time to time trade at big premiums to the underlying Taiwanese securities, but we can access those directly. So we will do our best to mimic the reference index.
All right. That's great to hear. Next one is what is the total expense ratio of the ETF?
So we're targeting below peer products in the market. It is rather complex, and we're looking at delivering Certainly under 1%, we'd aim to be materially below that over time. But to be better than peers in the observable market, we need to be below 1%.
Okay, so now we are still have some time, right? So we will just invite any more questions from the audience. Definitely, if you like to ask regarding the IOP, do feel free to put the questions in the Q&A. All right, right. So you can actually reference to any part of the of this application that you're interested, and if you have any queries, right? So one question is that there is 6.9% allocation to Hong Kong, even though it's ex-China. So is there any correlation to what is the Hong Kong underlying?
Yes, good spot. Does include Hong Kong. Again, this is Hong Kong-based equities, not any Chinese equities. And the largest security within Hong Kong is AIA. That's in the top 10 of this benchmark. AIA is a very diversified business across Asia. The bigger growth markets within AIA are places like Asia and places like India. So again, it's a more diversified Asia proxy.
All right. The question on whether the slide deck will be available on the Poem's website. Uh, this one. You'll check again and answer in a while. Do you have REITs in the allocation for this ETF itself?
So again, it will depend on what is in the underlying index. And in the underlying index, I do believe there are one or two REITs, but it'll be very, very minimal at best.
Okay, all right. So it does depends on the index. Can I also double check since it's on the question is that how often do you all rebalance or renew this ETF?
Yeah, the intention is to rebalance quarterly in line with the underlying index.
Right, quarterly rebalancing. Right. So given the heavy weightage in Taiwan and South Korean stocks
Mm.
exposed to IT, would this mean this ETF would be a good proxy to the AI boom in some sense?
It is, and as we sort of discussed earlier, it doesn't matter whether it's in NVIDIA, who is the leading GPU maker, or if there are new competition, whether it be on GPU or AI ASICs, you'll still need leading foundry and leading memory producers, which is TSMC, Samsung, Hynix. The other thing about that is Samsung and Hynix have already corrected quite aggressively, and the underlying commodity DRAM and NAND cycles are starting to turn up. So those stocks are in a slightly different part of their cycle to some of the other hardware stocks. But yes, it would be um, certainly a proxy to that. And as that develops, you will always need those kind of companies and that kind of product.
All right. Okay. So answer the question just now. I do not think the slide deck is available on the website. However, this recording is actually available on YouTube. So if let's say any of your the audience, right, what wishes to revisit the information, you can go to the PhillipCapital YouTube page, right, under the live the video, the recordings. You will definitely see the session there, and then you will be able to then revisit the presentation that was shared by Peter. All right, so I hope that helps. So one last
Good.
question that we do have over here at the moment is that if I apply for 10K worth of the IOP, will I get $100 based on the earlier slides? So I think this is more of the incentive, right? So I'll take the question where I have shared earlier is every $1,000 applied, right? You get $10 for the promotion. And thus, since the cap is at $100, then yes, the application cap for the maximum of the promotion is 10K. But definitely, you are investors who want to invest more than 10K are welcome to definitely do so. All right, just that the cap of the promotion incentive itself is at $100 per client. All right, not per account, per client basis. Okay.
I would just add in, and on, sorry, slide 16 again, in relation to the AI question, and also reiterate, it doesn't matter whether it's an AI boom today, it can be another different type of tech boom tomorrow. Previously, it was PC and internet, it was smartphone and tablet, it was cloud and server. Today is AI, tomorrow could be robotics, automation, autonomous driving, etc. But semis and memory will always be behind it. And I see a question on India and valuation. If we go to slide 21, and then the question is just around Indian equities not having performed very well in the last 12 months, so is it too risky? I would have said it's been the least risky it has been in the last 12 months to invest in Indian equities. We also run active strategies here, and we have been very concerned about Indian valuations and frothiness. But they have come down back to average levels on the MSCI India price to book, as you can see bottom right. And then on slide 22, they look a lot more appealing to, on the next slide, sorry. They look a lot more appealing relative to US equities, having already derated a lot. As I mentioned, some of the important factors that are changing and turning that should be supportive in future are authorities starting to ease policy on both monetary and regulatory. But also India's underlying economic growth rate is a lot more stable than the US or most other markets. India's corrected, but GDP growth rates are still at 6+%, and those are relative lows for that economy. GDP per capita is still only 2,500 versus China at 12.5, Japan at 33.5, and the US at 82. There's still a lot more room for long-term growth in India, and it's gotten the most attractive it's been in the last 12 months as you look at this next 12-month PE.
All right. Thanks, Peter. All right. Is there any more questions regarding the ETF information, allocation, index, or investment methodology? All right. So do feel free to check to ask. All right. So we do have with us Mr. Peter, who is from Nikko AM, and it's not often that we can actually directly speak to one of the product owners to actually understand more of the ETF, the investment overview in the sense in terms of the strategy outlook. Right. Okay. So the IOP will be ongoing from 17th of March, which is today, to 20th of March, this Thursday. So it will end at 5 p.m. on Poems, the platform, all right, the application, which I showed just now. So if you're interested to join or to apply for the IOP based on what we have shared already, right, do remember to apply by before 5 p.m. of 20th March, all right, and you will definitely be potentially eligible for the promotion, all right, of the up to $100 of the cash rewards if you actually apply in multiple 1,000 for the IOP. Right, so I think this is also one of the key slides which they want to share and leave you with information for the ETF. Any thing else to highlight, Peter?
No, thank you very much for the opportunity. We do think it's a good long-term product with less volatility and drawdown, as mentioned, and again, something that you can be comfortable sort of parking your money in relative to the alternatives. There are always risks with investment. Wouldn't shy away from that. But so long as those long-term drivers continue to hold, the opportunity should still be there. So with that, thanks very much for your time, and thanks everyone for listening.
Right. Thank you everyone for joining us this evening for this session. Like I mentioned, this will be fully available again on the full recording on the YouTube channel. So if you have missed any portion of it and you wish to revisit or you wish to look at the slides information, do feel free to go to the YouTube recording to look at the session's information as well. And then to see if you wish to help your decision making on whether to apply for an IOP for this period of time. But after the IOP period, it's definitely still be listed, and then you can use it to trade for the SRS and also other cash mode, right? So even for cash trading accounts can be trading on this ETF after the IOP period. But for the IOP application itself, cash trading account will not be eligible. So for those that wish to apply and you're only holding a cash trading account, do look for your trading rep or dealing team to see if you wish to open a non-cash trading account to just apply for this IOP first. Right. So thanks, Peter, for joining us, and thanks for sharing on this new ETF offering.
Thanks very much. Enjoy the rest of your evening.
Yeah, I hope everyone have a nice evening ahead and a great week as well. All right, thanks everyone. We'll be leaving it here for a while, 1-2 minutes more. If there are any questions, we will then take it. If not, thanks everyone for joining us this evening. Yes, so ETF itself is the exchange traded fund. So we don't really call it exchange traded ETF fund. So this ETF itself is a listed uh entity, right? So it's a listed fund per se. Yeah. Oh, yes, correct. So the question asking whether this is considered as an ETF or ETF fund. Yeah. So this will be exchange traded fund, right? So I hope that answered the questions. Any other questions, do also feel free to ask. All right. If not, if you miss a chance or you're not sure of any questions that you wanted to ask at the point of time, but you went back and considered and you have questions, do feel free to reach out to your dealing team or to us, the team that the email that you received for the webinar uh registration, and you can email to that email for more questions as well. Okay. If not, I'd like to thank Peter for joining us today, and thanks Nikko AM team for helping us to present on this new ETF offering. Yeah.
Thanks. Good night.
Yeah. Good night. Thank you.